Reserve raised interest rates last week for the third time since December 2015, and two more raises are expected this year. Joining me right now in a Fox Business exclusive is the president of the Chicago Federal Reserve, Charles Evans, and a voting member of the FOMC. It's great to see you, Mr. President.
Good morning, Maria.
Thank you so much for joining us.
Sure.
You raised interest rates last week. You voted to do so.
Yes.
Why?
Oh, I think the economy is on a pretty good course right now. Fundamentals are very solid. I'm looking for GDP growth of about 2.25%. The consumer is a strong contributor to that. And, inflation, I think we're a little more confident it may be moving up. If anything, that's my main concern. I want to make sure we get inflation to 2%. I think it's very important after being under 2% for 8 years. But I think that raising rates is, a fine move this year.
The markets are expecting 3 interest rate increases in 2017. Does that sound about right to you?
I think 3 is entirely possible. As I gain more confidence in the outlook, I could support 3 total this year. If inflation began to pick up, that would certainly solidify my report. It could be 3, it could be 2, it could be 4 if things really pick up, and we don't know what the additional stimulus might come from fiscal policy probably next year, and that would provide important lift for inflation probably if it took place.
But you and your colleagues were very clear in terms of it will be gradual. When you say 2 or 3 or even 4, you're talking about a quarter-point moves?
Yeah, this is always in terms of 25 basis point moves. Now, historically, we've done different moves, but more recently, 2004 to 2006, we did 17 25 basis point moves in a row, and we're expecting less than 80 years. So, I mean, that's sort of the benchmark for moves, unless things really took off, but that's well outside of anybody's forecast.
We had an economist on last week, Stephanie Pomboy from Macro Mavens, and she said, and I quote, "This interest rate increase was really ill-timed. If you look at tax receipts, they are down significantly, and that means incomes are down, tax receipts are down." She's worried about that metric, and she says the economy is not doing all that great when you really peel back the onion. Your thoughts?
I think the labor market's been very strong. It's been strong for the last 3 months. It's been strong for the last 2 years. The unemployment rate's 4.7%. The consumer has been an important linchpin for this strength. I think on any given week or month you can get some noisy data. But I think you have to look longer term. That's certainly the responsibility of the Federal Reserve, is to look at it over the medium term. And, I think growth this year is going to be 2.25%, and that's enough to drive unemployment down this year a little bit more and improve wages, and I think continue the upward march of inflation towards 2%.
How significant will you look at fiscal policy changes? If we get tax reform and we see, for example, we just had Tony Sayegh here from Treasury, and if we get a 20% corporate tax rate and we get a rollback in regulations, as you've been watching and studying and working with the Treasury as well, how significant is that in terms of moving the needle on growth?
Well, I think we're going to have to look at the details, because a number of the proposals are, really, new and innovative, right? Border adjustment tax and how this could affect certain industries and others in different ways. And so we'll have to see about the details and what it means for structural growth, because really structural growth is really the important aspect of this. It'd be great to get 3 or 4% growth, but unless it's accompanied by increases in structural trend growth like better labor force input and productivity enhancements, that's likely to put pressure on resources, drive up wages, which would be a good thing up to a point. But, of course, if inflation starts picking up above our inflation objective, I think financial restrictiveness would begin to play a part.
How significant has the wage increase been so far? I mean, every month we look at these jobs numbers and we're focused on wages. They went up a little, but how do you characterize it?
I think there's been modest improvement. I think that it hasn't been nearly as strong as you might have expected, given the fact that the unemployment rate is 4.7%. Businesses, small businesses, large businesses have told us for quite a long time they have trouble attracting workers. You would think that maybe higher wages would be part of solving that problem, finding the right skill levels, and that should drive up wages. But the wage growth has been less than the 3 to 4% growth that I would expect when you're sort of at a neutral wage growth with productivity increasing in line with our inflation objective.